Welcome to the Investing Podcast presented by Tusk Media. This is Outsider Trading, an audio and video deep dive into the people, places, and things that we find most interesting in the market.
Hey everybody, welcome back to the Investing Podcast. We're covering earnings reports this week, and in this video we have our senior equity analyst Ben Nye discussing BlackRock. Thanks for joining us.
Okay, well today we're going to be talking about a variety of earnings reports. BlackRock, obviously the ETF provider. I actually thought they were going to have a tough quarter. I thought their flows out were going to be huge, especially on the equity side. They actually had equity inflows of $30 billion. It was just a strong quarter all around. Retail net inflows were $16.7 billion, which was up sequentially. Net inflows overall were $57 billion, down sequentially, but still solid. iShares were $35 billion. Institutional net inflows, just everywhere they saw net inflows, people buying ETFs. And obviously the low tax rate really helped. They ended up producing EPS of $6.70. Street was looking for $6.38. They beat on revenue. There was a little bit of an accounting change, but by my estimates, they still would have been just ahead of the street, about in line. So overall, companies just executing. They are on a secular trend. We talked a little bit about cyclical versus secular in a little presentation I gave for a few clients earlier this week. And secular means that there's a long-term structural shift in place. So if you think about a secular trend, you can think of the move from offline retail to online retail, the move from a Macy's, a JCPenney to an Amazon, a Netflix. So you can think about it that way. A cyclical trend is something that goes with the business cycle. And I think about that as auto sales. It goes with the business cycle. So when you're talking about BlackRock, you're talking about a secular trend. There will be cyclical gyrations. Market goes down, market goes up. BlackRock will go down, BlackRock will go up. But over time, we're seeing this shift into ETFs. And part of that is because it's just so tough to beat the market. It's incredibly tough to beat the market. And advisors are getting wise to this. They're not doing active management like we are. They're not looking at companies. They're not reading like transcripts like this. What they're doing is buying a couple ETFs and building that relationship. It's all in the relationship. If you know the person, you get their money. And that's what it's become. It's become a sales job. It's become an insurance salesman job, where you can parade as a financial advisor because people like the sound of that, or a certified financial planner they have these days. Anyway, that's what these guys are using. They're using the ETFs. This is how they build portfolios now. And BlackRock is catering to that. BlackRock provides the technology platform. You can create a smart beta strategy. You can create a hedge strategy. Larry Fink, the CEO, said, "We have witnessed a big shift from the big financial advisory firms towards advice." So even the big guys are doing this. BlackRock's making money on the technology side. They're making money on the advisory side. They're making money off the ETF side. And BlackRock, to its credit, continues to provide solutions. With the increased volatility we saw last quarter, BlackRock's alternative asset and hedge fund ETFs actually performed very well. Fixed income platform generated $27 billion of net inflows in the quarter. Fixed income is notoriously illiquid. You try to buy a bond, you have to call up a broker and get a deal on the bond. Or if you're trying to fill out a fixed income allocation for a client who has to be 60-40 or 60-30-10 or whatever you have these days, you can buy the BlackRock fixed income ETF. Bear in mind, BlackRock still needs to be able to get the underlying. They need to actually get the bond themselves so that you can buy the ETF. But no one cares about that apparently. What's interesting is that the volatility in the fixed income markets has been, quote, actually really good for BlackRock. And they're also seeing really good growth in the Asian equity franchise and the European equity hedge fund. And part of that is because everyone was talking about this global synchronized growth story at the beginning of the year, and they were piling into all this stuff. And Whether or not I agree with managing money like BlackRock does, the company does really well. And it's an expensive stock, but it's catering to a cyclical trend, a secular trend. And they had a good quarter despite the weakness in equity markets. Of course, you get equity markets down 20, 30%. We'll see if they're singing the same tune. But yeah, equity markets down 0.75% like they were down in the first quarter. Yeah, people are still going to be going in BlackRock.
Tusk Media is a subsidiary of Narwhal Capital Management. Ratings and reviews of Tusk Media content are not to be construed as endorsements of opinions, analysis, or services offered by Tusk or its parent company. The opinions and predictions shared here are professional beliefs at the time of publication. We are not under duress from any of the corporate entities mentioned. This is not a solicitation to take any particular action. Although we are investment advisors, this information should not be considered investment, legal, or tax advice. We strive to be as impartial, insightful, and accurate as possible. We base our opinions, analysis, and calculations on information we believe to be reliable, but we cannot guarantee its accuracy. We can, however, guarantee that our opinions will sometimes be flat out wrong due to a variety of factors. Employees and clients of Narwhal Capital Management may or may not hold positions in the securities detailed and may or may not hold these positions in the future. A full list of all securities purchased, sold, or held during the 12 months preceding the date of this publication can be provided upon request. Unless otherwise noted, all data accessed via MarketWatch or the Bloomberg terminal. Past performance does not guarantee future results. A copy of Narwhal's Form ADV is available at the SEC's website, www.advisorinfo.sec.gov, or from Narwhal upon written request.